As we first reported a year ago, Twitter is open for a sale, but now it looks like another bidder has jumped into the soup here. Disney reportedly interested in the social media company, but the big question remains, will anybody be willing to pay top dollar for the struggling company that Charlie Gasparino, you have covered, and it is way off its highs of all time.
We should point out, tonight's going to be a huge night for Twitter. This election, or this debate, I should point out, is going to be tweeted live by everybody. I guess the verdict of the debate will be in on Twitter before any network. I mean, I hate to say it, but that's what's going to go on here. Social media will render a verdict on whether Donald Trump beats Hillary Clinton or vice versa way before we get on there. So a lot of people are going to be tuning into Twitter. And here's the irony of it all. People are going to be watching it, and it's still not making any money. Twitter is still not making any money. All its various metrics are down.
That's amazing. Everybody is going on this thing, and it can't make money.
And this is the rub. Now, CNBC had a report a couple days ago, which was essentially mirrored what we reported over a year ago. Twitter wants to sell itself. It is shopping itself to various places. That is not new. What is the rub here is that all these places, from Salesforce.com, that was like kind of a new name that they threw in there, which I was surprised by. Yeah. But not just that. Google, as we reported, you know, it's got a lot of money. Something that you could see them doing some sort of strategic alliance. They already have a strategic alliance. You see them buying them. Comcast is another name that I heard thrown in there. It's a media company, so that makes sense. Google, Twitter is media. And Disney right now, another name that recently got to, I think Bloomberg's reporting this. We should point out that, you know, we can write a story a day about who's looking at Twitter because everybody's looking at it. The question is, why isn't it getting done? And I will tell you this. It is a company that's very hard to sell because you're inheriting a lot of bad stuff. This is a company that's not making any money. You're going to have to pay a hell of a lot of money for it.
Doesn't it amaze you that tonight we're going to have the first global fact-checking exercise involving who knows how many people instantaneously on Twitter?
Yes.
And they can't make a penny off each one of us.
This is where finance and Wall Street sort of colludes and comes together with what's going on in the political world right now. This is a tweeted election. Donald Trump tweets like crazy, right? He moves the election based on his tweets, as people like me and some others move the markets on our tweets. And he has a much bigger following, obviously. And tonight, everything that he says, anything that Hillary says, will be debated and tweeted about and fact-checked on Twitter. Yet that won't move the needle for them making money. Will not move the needle. And that is the problem that Disney and all these places have. I will say this, Liz. Someone, I guess, is going to buy them at some point. I can't imagine, with their market cap being at, what is it now, $20 billion, something like that, you know, you're going to pay a premium of like something like a $10 billion premium. I mean, are they going to do a below-market merger? That's what I would think, right? And how is that good for shareholders? If you notice, the stock isn't up beyond $20 much.
It's 23. It's up 3 1/4 right now. But the fact, what I find fascinating, is that at its highs, it was more than $70 a share, and when it IPO'd, it spiked up to about 26. So it's really, it's really only where it IPO'd.
It's up 0.7% today, based on the Disney thing that I think Bloomberg wrote about.
Yeah, Bloomberg got that. But Disney is a widely held company, and people don't seem to like that at the moment. Disney's down 1 1/4.
Right. I just find it hard to believe any of these. Listen, what company's got a lot of cash that could just spend the cash? Google can. Google, as you know, has a strategic alliance with Twitter. Why would they need them for that? You know what I'm saying? You know, my tweets go out on Google. First thing, when you Google my name, you see the first thing you see is my tweets. So they do have a strategic...
Gasparino.
Yes. And one other, before we end this, I know this is kind of a, you know, this is not a huge story, but two big names, Perella Weinberg in investment banking, Joe Perella, Peter Weinberg, they are in the final throes of merging with a smaller company called Tudor Pickering. Why do we bring this up? It's because we cover Wall Street. And guess what? These two boutique firms, which used to advise on some of the major deals, they are having a hard time making it. And that's why you see mergers here. And I'll tell you one thing, Liz. If Donald Trump does get elected president, I can't tell you if he is or he isn't, and a lot depends. Does he act like a normal human being tonight or a guy that calls people's mothers' names? But if he does get elected president, you'll see a rollback in Dodd-Frank, I believe. And you'll see some regulations roll back, and you'll see firms like that make more money. Firms like Tudor Pickering and Perella Weinberg. Wall Street, you know, even though everybody's hesitant at Donald Trump, they're worried about him, but if they shouldn't be, I think, based on his economic proposals.
Good to see you, Charlie.
Okay.
Thrilla
see
in
you
Manila.
tonight.
What's your analogy?
I
said
the
Tyson.
the cat fight in Hofstra.
How original.
Yes.
Closing bell.
The hammering in Hofstra.